Hi traders, this is Senior Account Manager Adam Howes hosting a short webinar on advanced daily technical strategies, shorter price movements for this Thursday, the 14th of September. I hope this webinar finds you well. Just going to a short general advice warning as we do on every webinar that we do. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. So we're going to have a look at the daily technicals today, and this webinar is really around an advanced strategy that you can start using on the report that you get 2 times a day to your inbox. I am going to show you today a quick way to actually access the reports on your actual platform. Some of you may not have this available, but you can speak to your account manager in terms of accessing this live feed, which is a little bit more beneficial in getting the latest information possible on the daily technicals. Before we go on, there's going to be a really sort of sound message I want to reiterate on this webinar is that 2 mandatory requirements for this strategy to be optimally implemented will be that the trades must be placed as close to the timing of the report as possible. So we get the report once at 6:30 in the morning and once at around about 4 o'clock in the afternoon. Now, I realise at the end of the day that 6:30 is quite an early time for some. And 4 o'clock is traditionally when most people are at work, Australian Eastern Standard Time, that is. So really, it's about hopefully getting sufficient time to practice this, and then over time reducing the amount of time that you're actually spending on doing it. I would imagine that if you implement this strategy, it wouldn't take you any longer than say 10 minutes per day to actually start to really sort of get under your belt. But anyway, look, we'll get underway. Got a lot to cover, so we'll jump right into it. So first things first, on your platform, on your live platform, traders have access to what's called the back office of Trading Central. Besides any pair that you've actually got on your quotes button, we've got the little squiggle line which appears beside each pair. Now, if we take the AUD USD, for example, okay, we've got the little trading signals button just beside it. It's a little black arrow. If we click on that, what that will do is that will actually take us into the back office of Trading Central. So we'll just wait for that to pop up in a minute. There we go. Okay, and this is where you get your live price chart. Now, I'm not saying you get the live price feed. Okay, this is a static chart. You don't get the live price feed from, say, live charts on other platforms. But this report is updated at 2 key times a day when the report comes out to your email at 6:30 in the morning and at 4 o'clock in the afternoon, Australian Eastern Standard Time. So the whole purpose of this strategy is to cover the daily technical pairs only. So what we're going to have a look at is the daily technical report that came through this morning. Let's just have a quick look at this. Okay, so this was the report that came through this morning. We'll view it as a web page. Okay, so traditionally on the daily technical levels, you get 8 pairs to trade. You get the AUD USD. Please write this down as we're going because we'll be implementing it live on the platform in just a moment. We've got the AUD USD. We've got the SPI ASX 200. We've got the Euro US dollar. We have the GBP USD. We have the USD JPY. We have the Great British Pound against the JPY. We have, of course, gold, and we have oil as well. So basically, the way to get this strategy underway is to, as I said, the 2 crucial times that you want to be trading or be available to trade is around 6:30 in the morning and at 4 p.m. In the afternoon. If you're a little bit late, look, if you're around about 15, 20 minutes, even half an hour late, it's okay. You're getting to your platform at, say, 7 o'clock or at 4:30, that's okay. But just realize the longer that you wait, obviously the price will move. If it moves in the anticipated direction, then obviously you're going to be missing out on, some good profits. So what we traditionally do under this strategy at these times is we'd investigate our platform. what we would do is we'd actually hop into or investigate each pair at that time. So just for the time restrictions on the webinar, we're just going to have a look at one example, okay? And you do this the same for every pair. And we're going to use the AUD USD, the first one, as the example. So at 6:30 in the morning or 4 o'clock in the afternoon, what you would then do is click on your trading signals button, and it would obviously bring up your chart on the platform. So the price chart has been updated to reflect the current time of the report. Some traders get confused when they see 0422 or 4 o'clock in the morning. That's Central Eastern time. Okay, so we're looking at predominantly, overseas. The Trading Central is an overseas entity, so they're sending it out at their time. But when the report comes into your inbox at 6:30, it's relevant to that particular time. Okay, so the report is accurate when it's coming into your inbox. What we then do on this pair is that we have a look at the arrow direction, dictating which way we should actually approach the market. If the arrow is pointing down, then we sell, and if the arrow is pointing up, we buy. So the arrow pointing down in the AUD USD signifies that we should contemplate having a sell option in the market. Now, two of the key figures that you're going to use for stop loss and take profit on this particular strategy is that we're going to be using the pivot level in every trade that we do as a stop loss. So in this example, we're setting the stop loss at 0.8010. On this strategy, we're going to, the main difference between this strategy and other daily technical strategies is in this particular strategy, we're going to select a bit more of a conservative take profit. The reason that we're doing that is that the general nature of daily technicals is that with the general direction, they're often right. On the odd occasion they won't be, but most of the time they are right in the general direction about which way you should trade, because it's all based on pivot level in the market. Okay, if price is occurring below the pivot level, we expect further bearish pressure to continue. And Trading Central are very accurate when it comes to that general direction. The more arbitrary figure is where to put the stop loss. Now, sometimes traders, as advised on most of the webinars, would actually go for a stop loss on the second level at 0.7940. Under this strategy, what we're going to do is we're going to have a look at a more conservative level of take profit to lock in a profit. Sometimes a shorter take profit target is much more achievable than, say, a longer term profit target, and the volatility in the market will be different from one day for the next. Under these set of market conditions, it's a very set of different market conditions than it was a year ago, where we saw sort of big moves in one direction. But there's a lot going on in the world at the moment. Obviously, we have the North Korean situation. We have a lot going on in the Eurozone. Here we have a lot going on locally as well, and particularly the main focal point is in the US, obviously, with a lot of fundamental data affecting the market. So what you might find is that price is actually a little bit more consolidated in some instances than normal. On most days that would occur, but for that reason, the market will move, but probably sometimes not to the degree of which it once did about a year ago, before the Trump administration came in. So under this strategy, what we're going to do is we're going to be selecting the first line of support or resistance, depending whether we're buying or selling. Now, if we're selling, we're aiming for support as levels of a target. We're going to aim for the first level of take profit, which is 0.7965. 0.7965. So just to reiterate, the arrow direction dictates whether we should buy or sell. We're selling the AUD USD. We've got the pivot level as our stop loss and the first level of support as our take profit at 0.7965. Let's just do another one. Okay, so we'll go to the second one. We're going to go to the ASX 200. Let's see if we got that there somewhere. Might actually have to add it to the platform. ASX 2112, sorry about that. Okay, we'll add that. So we've got the ASX at the bottom here. We'll click on that graph quickly. Just taking a little bit of time, so we might actually fast forward to the Euro US dollar. Okay, so we've got the next pair, the Euro USD. So we locate the Euro US dollar, which should be just down here. Yep, so we'll click on that. And then that chart has been uploaded. And as you can see, okay, we've got a preference to sell in the market here with a stop loss at 1.193 and a take profit at 1.187. Okay, 1.187. Let's just do another one just to make sure you get the idea of it. So we'll go down to GBP USD. We're going to select the graph again and just have a look at the preference. Again, we've got a sell preference preferred on the GBP USD with a target of 1.318 and a stop loss of 1.325. And we'll just do one more. We're not going to cover them all today, but we're going to do the USD JPY. Got a buy preference on this preferred with a stop loss of 109.9 and a take profit of 110.9 just here as well. So what you might find in these traditionally in these trading setups is that you'll hear a lot about risking less to make more, and that certainly is true in the forex market. What you might find is that you're risking a little bit more on these trades to make maybe a bit of a lesser amount, which is okay. But the nuts and bolts of the strategy is to really sort of investigate all the pairs and place the trades without hesitation. So by the end of this exercise, what you'll have is a list of all the pairs, AUD, USD, right down to oil, with a buy or sell preference, with the pivot written down as a stop loss and the first target, the level target, R1 or S1, depending on whether you're buying or selling, as the take profit. You'll have that written down for each and every pair. We're going to use the USD JPY as an example today. So we've got a target of 110.9 and a stop loss of 109.9. So let's go back to our chart, our trading platform, find the pair USD JPY. Click on buy. First thing we do is enter our SLTP, put in the stop loss of 109.9 and a take profit of 110.9, risking 70 to make 42. So as we said, the main direction on the report from Trading Central is usually very accurate. It's just the amount of take profit that's expected. So what you'd find after having placed every single trade, such as we'll do here, when you placed every single trade on your platform, you'll have 8 trades running simultaneously at one time. Now, will you win all of the trades? Probably not. It's foreseeable that some of the trades will lose. But because the direction is proven to be quite accurate, we'd expect most of the winning trades on the platform to actually outweigh the losses that we're making on the account. But just remember, the main message of this is that you need to be bang on at the time at around about 6:30 in the morning or 4 o'clock in the afternoon, okay, to be able to do that. Now, a good question is, what if you're trading both times of the day? Okay, and that's great. If you're trading sort of both the morning and the afternoon, that's fantastic. But what would happen if, say, you placed a trade on the USD JPY and then came in and found, the same preference, but the levels have changed? Well, if you bought the USD JPY in the morning with a certain level of stop loss and take profit, and then came into the afternoon report and found that the preference had changed with the buy preference remained the same, but you had a higher stop loss and a higher take profit, you would click on your trade and alter your trade, and then you would click OK. What would happen though if you came in and found the preference had changed to a sell? Well, if you bought in the morning and it said sell in the afternoon on the USD JPY, you would terminate your buy position for whatever the position would be at that particular time, and then you would go into the sell preference and create a new trade for that pair. Okay, so just bear in mind that you can trade twice a day if you've got the time, but sort of picking one time is fine, maybe just to avoid confusion on between your pairs. So just when you're placing these sorts of trades, we'll just go back to the concepts of leverage and available equity, and I'll log out of my account here, and I'll go into my other account just to show you what I mean. So we've got the my actual equity in this account. And then go to demo. Okay, and then what we do is we go to USD JPY. We go click on buy. SLTP, as we said before, on the graph we had a stop loss of 109.9 and a take profit of 110.9. You would then go about selecting the proper use of leverage on your account. So obviously I've got 50,000 and 100,000 and so forth and so on. When you're choosing a position size, it should always be proportionally leveraged to the amount of capital you have in your account. Normally what we'd advise on the use of leverage is that if you have a certain balance, that you don't leverage more than 10 to 1 on your actual balance. If you over leverage, it can be a double-edged sword and work against you. So if you have a 5K starting balance, then the maximum you would do would be 50,000 on positions on your account. Obviously, if you have 10,000 in your account, you could do 100,000 and so on and so on. So just to reiterate the main message, okay, just really sort of drum this in because this is really, really important. Is that we need to place the trades as close to the timing of the report as possible. Okay, at 6:30 in the morning and at 4 o'clock in the afternoon. You need to be bang on the live charts at that time to be able to do that. Your trades must be placed across the 8 instruments. Okay, so it's not good enough to do 1, 2, or 3. Okay, you must trade the 8, the full 8, to realize the benefit of the strategy. The reason that we do that is because we hedge against other losses in the market. We hedge against other losses in the market to make that happen. So coming to the conclusion of the webinar, if you have any questions about that in general, or if you need any clarification on the points discussed, please contact your account manager at ForexCT. If it's myself, I'll be really happy to assist you, as will the other account managers. And we look forward to getting you underway on this particular strategy. Thank you very much for your time. Thank you.